morning, everyone, and thank you so much for being here. I'm delighted to see everyone in this room from all parts of the market and even the wider stakeholder community. I'm absolutely delighted to be here in Singapore, and again, thanks so much to the generosity of the MAS, the Singaporean people and government, as well as all of our sponsors for helping to make this event happen. I think the in-person conversations are extremely important, and despite the Scope 3 issues, I hope that we can make up for that in progress we can make towards climate transition and addressing climate change problems. Okay, let's get right into it. My name is Mushtaq Kapasi. I'm from ICMA, and we have a great panel here today. We have Gladys Chua, Chief Executive Officer of RAM Sustainability from Malaysia. We have Puja Shah, Executive Director DCM, and Head of ESG DCM for Asia ex-Japan from JP Morgan. Rahul, Sheth, Global Head of Sustainable Bonds at Standard Chartered, and Sheng Yong, Green Bonds and ESG Analyst for Asia Pacific at BNP Paribas Asset Management. And for this panel, we'll be talking about the Asia perspective. Just a bit of housekeeping. We do have this panel open for Q&A, so I'll try to leave some time at the end for those of you in the audience who would like to raise your hands. But in the meantime, if you do have questions that you'd like to submit via the app, I will be monitoring the app from time to time, and I don't mind if you start asking questions now. Please do feel free. Thank you. So, we've heard about the latest guidance from the principals, and particularly transition finance and sustainability-linked bonds. Of course, it is a tremendous amount of work from the Executive Committee of the Principals and all of the hundreds of organizations involved in the principals to come up with market standards for these products to help drive investment in climate and social goods. That's a big job, but in some cases, it's actually a bigger job to convince the companies and the banks to use these to issue the bonds to invest in transition finance. So let's start there with our discussion. And Rahul, in your day job, you speak with companies from around the world, from the energy sector, from the property sector, from agriculture sector. You're based in Asia, but you have a global role. Tell us about the conversations that you're having with companies when, frankly, you're pitching or trying to convince them to issue ESG instruments. How are the conversations different in Asia and the rest of the world? How are they the same?
Sure. No, thanks for that. I think, and firstly, great to be here today. I think, as you mentioned, we have the role of convincing issuers to use these labels. I think that was true a few years back in Asia. I think the rhetoric has completely shifted. Now it's about issuers who've already sort of gone that extra mile, done internal ESG specific policies and strategies, and now are themselves on this path where they do realize that they need to come out and talk to investors and talk to the general public as well as regulators in terms of how they're making tangible progress in that. And issuance of label debt is one of the many ways in which you can do that. So I think the rhetoric has significantly shifted into this becoming a bit of a hygiene factor in most cases, where especially organizations who have sort of led this are pretty much in a driver's seat in terms of ensuring that they use their existing policies and frameworks and try and come out with label debt. Just to put this in numbers, we are a group of a number of bankers here in this room, so I'm sure we all love numbers here. So in terms of global volumes, firstly, 2021, of course, a year like no other. We hit over 1 trillion in GSSS bonds. We, of course, last year saw a decline, and that was probably amongst the first years where we have seen a decline. But encouragingly, this year we've hit about close to just over 500 billion at last count in terms of global volumes in label debt. But what's more interesting is when I look at Asia ex-Japan G3 label debt, which is one of these labels, to the total debt. So that number used to be under 10%, between 3 to 10%, depending on which year you look at before 2021. And that number now is hovering over the last 3 years in the 25 to 26% mark, which means 1 in every $4 that you raise in Asia in the G3 markets is in labeled format. And what's important is, and this excludes a lot of sovereigns like the MAS, like the Singapore government rather, and as well as the Thai government, where they've raised a humongous amount of financing in this in the label format, but that's in the local currency market, so we don't even count that. So if you're looking at G3 markets alone, 1 in every $4 going into a label format tells you that there's a lot of peer pressure, which in itself is an enabler, amongst other things, for issuers to sort of be self-motivated and convinced to hit the markets. What's also interesting is, while this market, of course, it does function with, it does require your policies and your strategy to be in place. The added impetus from events like COP, given you mentioned what's happening globally, the Middle East market, for example, and I take Middle East as an example because that's another emerging market. It has sort of a lot of similarities with Asia in terms of hard-to-abate sectors, predominantly, dominating most of the economies there. So when you look at that market, the number of percentage of ESG labeled bonds was sub 5%, and now that's close to 30% this year. So that tells you what an event like a COP in the region can do in terms of optics, which drives this, but also that sort of becomes a part of your DNA at some point, and the discipline that we see in a lot of emerging markets issuers, who 3 years back, were probably in a scale of 1 to 10, were close to 2. They are now at 7 to 8. So that's a huge, humongous shift in the way people look at things.
Okay, thanks so much, Rahul. Actually, I took at least 3 interesting points from those comments. First of all, unlike, say, 5 years ago, when you really had to convince treasurers, you had to convince corporates to even think about ESG, that conversation is over, right? So now it's going from an already existing ESG framework to actually issuing the labeled bonds. That's the new conversation. And
I think the challenge here is now to keep pace with the developments in the markets. The number of different publications that we have on a monthly basis. I think that's the bigger challenge.
Including, yes, my reading list is getting longer and longer every day. 2 other things. One is the importance of peer pressure. So I think the momentum is actually quite important, especially in Asia. Issuers are always watching other issuers and watching what they're doing. So the more we can kind of plant that seed, the faster we can get issuance to grow. And the third, I think, extremely important for Asia as well. You mentioned the Middle East, but the importance of the policy atmosphere and the importance of official sector support, whether that be explicit, whether that be a carrot or a stick, or whether it be somewhat informal, just in the way that Minister Andrani is encouraging the growth of transition finance. Okay, Puja, from your perspective as well, and I think your unique perspective here is that you work not just with issuers of ESG and green finance, but also with traditional vanilla forms of finance. So I'm really curious to just focus on the conversation that you would have with an issuer or a borrower when they're trying to decide, okay, I'm going to do a loan, I'm going to do a bond, I'm going to do some sort of financing instrument. Should I make it labeled in a sustainable way, or should I not? Is it worth the trouble? Tell us about that conversation in Asia.
Thank you, Mushtaq, for asking me the question. And it's really fantastic to see the conference happening here in Singapore. Before I kind of talk about this, I wanted to add a little bit to what Rahul mentioned, especially on just the group here understanding on how fast Asia has adopted ESG. And I think it's important for everyone to understand that almost 5 years back, ESG was not a very innate or intuitive topic for corporates and issuers. So when we used to talk about things like greenhouse gas emissions, scope 1, scope 2, scope 3, it was not a topic that was considered in the same vein as, let's say, financial reporting, as operations, as supply chain. And I absolutely agree with Rahul that that has changed significantly in the past 5 years, in the sense that ESG has become a lot more mainstream, and very, very importantly, from our perspective, that it's become very strategic. So it's a topic that reaches board-level conversations, and I think that's quite important in terms of driving the market. The other thing which I find fascinating and very impressive, apart from the numbers which Rahul mentioned, is just the quality of the conversations that we have with issuers as well as investors. And this sort of, in a way, answers your questions. So, I would say probably as recently as 5 years back, when we used to have conversations with investors and also with the market as a whole, the focus used to be on the instrument. So let's say we go to the market with a green bond, there would be questions like, what is the use of proceeds? What are the projects and things like that. Today, I can, wholeheartedly and explicitly say that whenever we go with a bond to the market, and as I cover sort of conventional piece as well, there's a lot of focus on ESG, irrespective of whether an issuer is doing a ESG label or not. And that sort of goes to the peer pressure point. The peer pressure is not just driven by issuers issuing, but it's also driven by a market expectation. So, investors want issuers to spend time and invest, sort of focus on developing a strategy for ESG, which I think is critically important. The other piece, which I think has changed a lot in the ESG Asia bond market, is just the quality of reporting. I always have discussion with issuers on a daily, ongoing basis on disclosure. And I think that's probably the number one topic that, most banks and my peers spend time on. And I think the quality of disclosure and the focus on it has changed massively. So, when we kind of take, let's say, a very simple example of a green bond and we take the framework to the market, issuers always get the feedback from investors on a frequency of ESG financing, because there is an increased focus and feedback from investors to have a greater piece of the financing being green labeled, whether it's sort of just user proceeds or KPI, because that kind of pushes the narrative of ESG. The other piece is a lot more focus on forward-looking expenditures. So, when we take frameworks, investors want to see forward-looking focus, because the idea is that this instrument should add to the decarbonization of the company, of the country, of Asia. And lastly, I think the biggest piece that has changed is the focus on reporting at the instrument level. There's a huge focus on impact reporting and, the quality of impact reporting. And I think there is a constant sort of focus from investors to have high quality impact reporting. And the last thing that I wanted to highlight, which I think is very encouraging for banks like us who are sort of structuring these instruments, is that from an investor perspective, there is a lot of development and sort of focus on ESG. There are people I often meet who kind of head their ESG teams, and also the development of what we call the stewardship teams within investors, which I think is fantastic, because transition is a big topic in Asia. I think for us to achieve transition, it is going to be a journey, and investors will have to invest time and effort to engage issuers, because on day one, I find it hard that, most issuers will be able to align with recognized climate scenarios, whether it's 1.5 degree or 2 degree. And therefore, it will be sort of a constant dialogue on what's the best way to meet a certain target, best way to kind of align yourself to a more aggressive target versus the NDC, then move on to a well below 2 degree, and then 1.5 degrees. So these developments, I find to be extremely positive and sort of taking the market in the right direction. Of course, there's a lot to do. Clearly, that's why we are all sort of sitting here and having this debate, but I thought I would share my perspective.
Thank you, and we actually don't mind an optimistic note now and then with all the gloom and doom. I think two positive points that you raised. I mean, one I would echo from my experience is that the conversation with especially CFOs or treasurers about issuance of green bonds, let's say, when I used to give presentations, 5 years ago on the green bond principles, the question I would get is this going to save me money? And is it going to save me a lot of money? And how is this actually going to, or how much is it going to cost me? Those were basically the questions. And maybe I'd tell them something about issuer diversification, and they would sort of look at me a bit skeptically. But now that conversation has gone to the strategic, the board, the wider stakeholder level, and it's basically a no-brainer. And now the issuance is following the overall sustainability strategy. So.
Yeah, I absolutely agree. I think also to add to that point, Mushtaq, there's a lot of conversation that we have with issuers on preparedness. And, for a green company to do a green issuance is a no-brainer. And, if you spend time on developing your strategy, put money to it, absolutely, you go ahead and do a green bond. But the tricky piece is when we get into the hard-to-abate sector. And that's where we get questions on, are we ready to do it? Do you think the market will accept us? What else do we need to do? And I think financing in such kind of scenarios is almost the last piece. I think it starts much, much ahead from talking about ESG as a strategic kind of agenda, thinking about how they can invest in businesses which can actually help companies decarbonize. So I think those type of conversations are also becoming a lot more common in Asia.
Okay, well, great. Well, actually, that's a fantastic segue to Gladys, because Gladys is CEO of an external sustainability reviewer. Gladys, you've also been very involved in the global standard setting for ICMA's guidance for many years, but you have your feet firmly on the ground in ASEAN, and being based in Malaysia and being working with many of the, frankly, hard-to-abate sectors in the region. So how do you address the question of reporting, of disclosure, and tell us about some of the conversations and the work that you've done with companies in, let's say, Malaysia, the rest of the sub-region, that have ambitions to be transitional, that have ambitions to be green, but aren't there yet and are a little bit nervous about the reporting requirements, a bit nervous about the investor base globally?
Yeah, thank you, Mushtaq. In terms of, I think I would address more from our perspective in Malaysia, because we primarily work with issuers in the country. I would say that in terms of corporate movement, I think I totally share the same sentiment with the other panelists here on what they've mentioned with regards to, the stages from, past 5 years to where we are now. I think in terms of where we are now in Malaysia, I would say that, we attribute a lot of the improvement to our regulators as well. They have basically set, the guidelines, the necessary frameworks, Sukuk frameworks for sustainable and responsible investments. So that sort of started off the market in 2014 when the Green Bond Principle first started as well. I think back then it was called SRI Sukuk Principle Framework for Malaysia. So I think we have seen that, moved to, quite a significant level now. We have quite a sizable amount of green issuance in Malaysia. I would say that sustainability bonds, the main one, it is 70% of the total outstanding in our market at the moment. So there are a lot of banks as well as corporates that have, issued in our market. And in terms of, I think you mentioned about, transition as well. I would say that it might take time for some of these corporates to, implement some of these best practices, in the market. I would say that.
Sorry, could you elaborate on that? The best practices, which ones are the most challenging sometimes?
Yeah, I think because as an external reviewer, we also follow very closely, the GSS principles, sustainability link, climate transition, finance handbook. I think those are, the thought process and, best practice that, we also want the issuers to, align with, so that, they can come out, more credibly to the market. But I think it might take time. I would say that also in the market there are different categories of corporates as well. You have the large listed ones, you have the mid-segment, you have the smaller listed ones. So I think in terms of the large listed ones, we do see, a lot more investments in, their activities, ESG practices, sustainability activities. So most of them, I think quite a number of them, has set, net zero targets for themselves. But I think in terms of, coming to the market to issue transition finance or some of these bonds, I think it's gradual. I think we will see over time. It would take time for them to implement some of these best practices, strategies, and also science-based targets, for example, to appear credible. But I think we are hopeful, that some of these would come to the market eventually.
Okay, well, hope is great, but what do you think, in your experience, what else do you think needs to be done to perhaps speed this along? I certainly hear a fair bit of alarm about the pace of change, and certainly delay can be turned into an excuse for not being very green or not being sufficiently ambitious. So what are your suggestions for how to encourage faster transition, faster adoption of some of the global standards? Sorry, I'm putting you on the spot, I know.
Yeah, so I think that's actually quite it's a very challenging question, and it's also a very real issue in the market. I think we need to address climate risk fast. So in terms of practical, on how to put this into practice, I would say maybe a staggered approach. I think in terms of the ASEAN taxonomy, XRI taxonomy, those are very principle-based. I think those could, help the market to transition faster. And in terms of our review, I think if anyone comes to the market with some of these, I think the intent is very important, and also the communication of, the level of ambition, I would say. I think they must be committed to some of those, and also be transparent about what they are doing. I would say that, perhaps, that can be applied to the local context as well, the level of ambition, I think, from where they start from in terms of their baselines.
Actually, I think that's a very interesting point in terms of how do you get folks in the system to adopt this faster. I think we've seen that for a number of products, not specific to sustainable finance previously. I think especially when you look at Asia and emerging markets, the market participants respond a lot faster to regulation. So even when you see the development of this market in the East or in emerging markets, it was a regulatory push factor. In the West, it was an investor pull factor, if I can demarcate it that way. So while I'm not suggesting for it, but if in some formal capacity, if this does come as part of certain frameworks, certain regulatory frameworks, I think it helps that adoption, it gives that extra push. And on the other side, and you're looking at the markets perspective, when you have, again, putting my capital markets hat on, where you have an arbitrage created in the market with following a certain standard or with adopting a certain standard faster, again, there's sort of that push, the commercial push. So I think it has to be a bit of an ecosystem-based a regulator and an investor coming together.
Sure. Maybe we get into the arbitrage bit a bit later. That can cause its own difficulties. But no, thank you. And it just something comes to mind is just to paraphrase a future speaker actually later today this afternoon, Eugene Wong. He once said something to the effect of, "You can't tell someone to jump across a large river or they're just going to drown, right? You have to provide some steps along the way so they can get across." And I think some of the tools that we're seeing, Singapore Asia Taxonomy, for example, the Amber category, these can be very helpful tools in that respect. Okay, I'm going to step back a little bit and to touch upon something that Rahul and Puja mentioned as well, which is as we call it, GSSS, Sustainable Bond Issuance. We all love, especially us market practitioners, we all love to see these charts, these bar charts with issuance and talk about how many billions of dollars are being issued. That's all wonderful. We want to encourage that. However, what we're all trying to achieve is actual investment in climate projects, social projects, and outcomes in terms of climate and social goods. So one question that comes up quite a bit in the history of green bonds is that of so-called additionality. And basically what this means is, are green bonds, are social bonds, actually increasing overall investment in green projects, in social projects, or are they just basically validating investment that would have already occurred? And Sheng, I know you've thought about this as well. Tell us your perspective from Asia.
No, I think the concept of additionality comes from the history of development finance, the DFIs, where they would make concessionary funding to certain projects where if really the finance didn't take place, the projects really didn't happen. That's where the concept of additionality comes from. I think in the concept or in the context of capital markets, public capital markets, I think that has to be reframed to something else, and that is, how does that specific instrument, how does that help your company? How does that help your as an issuer? How does it move the picture? How do you achieve your stated objectives, your stated ambitions? So to give you a negative example, let's start with a negative example, then we go into a positive example. So a negative example, you would imagine a power company issuing a green bond to finance solar PV. That's great, because that's exactly what we want. A solar PV, it ticks all the boxes, especially when it follows the ICMA GBP. However, when you look at the issuer's business plan, the forward capex, and this is where the money is, right? You see that if you see that the forward capex intends to spend 4 times more on thermal power versus renewables, does that change the game for the issuer, right? So even if the instrument is green and it finances or refinances something that's solar PV, which is generally accepted as green, it doesn't, it's not a coherent picture, right? And so from that perspective, going back to the question of additionality, or I think what Puja said, ambition, right? What's the ambition of the issuer? How does the instrument help the issuer achieve its ambition? In that case, I think this particular negative example is clearly not what we want. Now, going to the other side of the spectrum, a positive example. I've seen a chemicals company. Now, chemicals is probably one of the sectors which are harder to abate. In addition to cement, iron, and steel, chemicals definitely still heavily rely on fossil fuels. But we saw a global chemicals manufacturer say that, well, we're going to print a green bond, and this green bond is directly related to our 8 billion annually, 8 billion capex a year to transition from a fossil fuel-based feedstock to produce chemicals to a model where by 2030, it will be more than 50% of our chemical sales coming from renewable feedstock. And this green bond that we printed, or the issuer printed, directly funds that 8 billion a year capex. Now, for us, that's a perfect coherence, right? And this, in our view, contributes back to the achievement of the ambition, that additionality in that context.
Okay, that's really interesting, actually, and I actually learned something from that answer, because I think it shows that the additionality question is a little bit asking the wrong question, right? It's sort of trying to prove a false positive, so to speak. It's saying, what if, in some alternate universe? But what you're saying, is the way I understand it, is it's really about putting the green bond, or putting the GSSS bond in the wider context of the CapEx strategy, of the transition strategy, and looking at whether that's credible or not.
Indeed, and I think the Climate Transition Handbook, with its updated guidance, really helps investors like us. And I mean, I guess we are a global asset manager. We have resources My team is about 30 people around the world, so we have the resources to make the assessment ourselves. Imagine if it's perhaps a smaller asset manager, a smaller asset owner who might not have the luxury of 30 people in the team. This guidance from ICMA or other references out there by other institutions, these really help investors to make informed decisions, to make better informed decisions. And at the end of the day, that's what we want. We want to facilitate capital towards projects, towards assets, towards activities that really generate positive benefits.
Okay, great. Well, funny enough, you've just half answered the first question from the app, which is a challenging question, and I'm going to read it word by word to get the tone. Will the appetite of investors for transition-themed bonds really improve following the updated ICMA transition handbook and the development of credible taxonomies in the region? Maybe, Puja, I'll start with you, put you on the spot, since you speak with a lot of investors, and happy for any of the other panelists to chime in.
Well, I think, it's not so much about transition theme bond. It's more about, from my perspective, the focus and push on transition in Asia. And I go back to what I mentioned first. The financing is almost the last piece in transition, especially for the hard-to-abate sector. It's more sort of starting almost 101, right? And I think, and I do think the Transition Finance Handbook and the improvements in it sort of give a guidance on what issuers should expect and prepare and think of. So for example, additions like a scope 3 and whether that's relevant and material to you, and inclusion of that. And scope 3 is a topic that's discussed very widely globally, but to be honest, fairly nascent in Asia. I think it's sort of gotten traction and issuers are kind of focusing on it a lot more, but I think these are the kind of regulatory and sort of taxonomy level clarifications that do help. Just sort of broadly speaking more on transition finance, if I may, and talking about what will help the market further is, from an issuer lens, which is a dialogue that we have all the time, is kind of talking about transparency and discussing very openly on what is the point of view of the issuer. And that also ties in with what Sheng mentioned. I think, there's a lot of focus on disclosure, and issuers need to be completely open about very material ESG factors, but also highlight the challenges that they are facing in terms of adopting decarbonization. Because ultimately, ESG is not an issuer level point, it's an ecosystem. And many of our issuers face jurisdictional and structural issues in adopting decarbonization in a material way, right? And therefore, I think they should essentially be very open and talk about this with the ecosystem as well as investors, so that investors can appreciate that piece as well. But of course, it's also quite important to have that dialogue with the regulator as well as, very importantly, with the sovereign. Because I think the sovereigns have a very, very important role in kind of being a big enabler in terms of pushing transition. And I think clearly the sovereigns in Asia have spent a lot of time, focus, capital on pushing transition, but in many, many sectors, especially in the hard-to-abate sector, things like carbon economy, things like developing incentives with respect to developing green products are going to be quite critical, especially for the hard-to-abate sector, to kind of invest, put money into transition. So sorry I didn't answer your question directly on transition finance, but I think it sort of goes back to the basics. It's a lot more driven by the ecosystem and driven by how everybody's working towards giving all the tools to our issuers to make sure that they use these tools to kind of invest in the decarbonization strategy, and of course then use the transition finance pathway to do issuance in a credible way, align themselves to potentially global benchmarks, whether it's a 1.5 degree or a 2 degree or more ambitious than the NDC and so on and so forth.
Yeah, so I'm just going to take 1 minute because Rahul also wants to.
No,
to
I think an investor view on this is more important.
So a quick 1 minute answer. I think the word transition has been used, and rightly so. It's hugely important, but we have to make a distinction between what happens at the issuer level and what happens at the instrument level. So in the concept of transition at the issuer level, think of it as a balance sheet, whether it is a corporate or even a sovereign. You could imagine a sovereign balance sheet is its entire, with whatever happens within the sovereign borders. But at the issuer level, you would think from a balance sheet perspective, it's changing, polluting assets within the balance sheet to hopefully at the end green assets in the balance sheet, right? And so how will you do that is to either replace polluting assets with green assets, which means it can be funded by green bonds, and you could technically call it transition finance, even if it's a green bond. Or the other way is to remove polluting assets with less polluting assets. And this is, I think, in the Singaporean taxonomy, the amber category. And this is perhaps something missing in the EU today, but so it goes back to, so at the at the issuer level, we make that distinction between, or rather we make the distinction between issuer level transition and instrument. Now for the instrument, we have previously transition bonds which are pseudo, user proceeds, and today we have formally the SLBs, which contribute to that instrument level transition piece. But just, sorry, I more than a minute now, but I just want to make a distinction between issuer level transition and instrument specific transition.
Thank you. Rahul?
Just a little bit more on a philosophical level, I think there's a lot more education required with issuers and globally the community at large that transition as a label is not a bad thing. I mean, many issuers, they have a view that the moment I issue a transition, I label myself as quote-unquote a brown sector. Well, you may be a brown sector, but people have a view that they'd rather, especially when they've seen their peers issue in green format. So I think that education goes a long way in sort of supporting this label. And I think one of the points that we discussed over the panels, over the sessions yesterday, Mushtaq, so I think there's one inherently, you do have certain advantages in terms of the SLB, where effectively all the characteristics that you need to issue a transition are already part of SLBs in terms of having long-term, medium-term trajectories, in terms of having a capex plan. Transition goes a little bit ahead of that from a label perspective in terms of reserving a set of assets alongside having trajectories. So many issuers, at least that we've spoken to, have taken the step of issuing an SLB. And so and sometimes they can be interchangeable conceptually in terms of what they're trying to achieve. But just from a usability of the label perspective, I think it just, to Puja's point, it may go beyond the label, but you may see everything in a transition bond being manifested in other labels.
Okay, thank you. Well, just on the transition label aspect, I mean, what we have, of course, seen in the last couple of years is a lot of skepticism about green finance. Talk about greenwashing. We'll be addressing that very directly in a future panel later today. But also some concern, as I've heard from issuers, about the whole idea of transition being vulnerable to criticism, being vulnerable to accusations that this is just another way of hiding not being green enough. And from what you're saying, Rahul, it seems like that is not as much of a problem as maybe it has been before. We hear of this term green hushing as well. Corporates are afraid to be green or afraid to go out there and be green because they don't want to be criticized. I'm curious, for just throwing this out to the panel, your perspectives on that, and especially Gladys, if you're seeing any of that in Malaysia or in ASEAN, if that has been evolving over time, if that's getting better today.
Yeah, I think in Malaysia, I mean, we have not seen any labeled transition bonds or sukuks. I think partially because, I think one is, fear of criticism and, whether their framework or their strategy is, strong enough, for that. I mean, I think, a lot of education would be required to, push some of these towards some of these labeling. But I would say that the market would need, I think, time to, implement some of these. And also, I think just now I mentioned about, the being able to meet some of the principles under, the Climate Transition Finance Handbook. I mean, we've spoken to a few potential issuers. They have, I would say that, they're still wrapping their heads around structuring this sort of transactions, basically from, measurement of, their emission levels. Yeah, so I think in Malaysia, I would say that it's still pretty nascent, early stages in terms of emission measurement, baselining, target setting, and having that, overarching strategy to manage this emission reduction. I think that is still in the works currently. So I would say that, in terms of labeling, I think it would definitely, take.
Exactly. So there are still a couple of steps that need to be taken. I mean, they're still not even at the real measurement stage, despite the optimistic remarks from Puja. It's still not there for everybody. And even once you get the measurement, you need a strategy to interpret that and to benchmark that against. Okay, I've got another good question from the audience, and this is for anybody on the panel, perhaps for the DCM folks, but also maybe for Gladys as well. How much do you advise issuers in Asia Pacific to take into account non-Asian taxonomies, such as the EU taxonomy? So how do those different taxonomies, and China, of course, as well, right?
Yeah, happy to take a stab at that. And so the way we look at Asian and not, when I say Asian, I mean non-European issuers who are not, let's say, mandated to follow a particular specific taxonomy, is to use at least the thresholds, the technical screening criteria when they're looking at the asset selection and when we prepare the asset register for them. We may not include issues like do no significant harm, which we do believe that even some of the European issuers are sort of grappling with. So a lot of this is more about the technical sort of thresholds that we deal with. And that at least gives you a view that this particular asset that I'm including is from a technical criteria meeting some of the international standards. But we do make sure that we are very clear that this is not a taxonomy compliant or an EU taxonomy compliant issuer or issuance at the very outset. So these are some ways where it's a bit of a hybrid solution. So you're going a little bit above and beyond what potentially a local requirement could require you to pursue.
Yeah, I think just to add, and I agree with what Rahul mentioned, I think, there are issuers in Asia who do follow EU taxonomy. I wouldn't say that it is, very widespread. I would say a lot of Koreans, for example, follow it, primarily because Korea has been sort of accessing the ESG bond market almost as, sort of a first mover. So we have seen that evolution in the market in terms of sort of adopting to thresholds, potentially some issuers adopting to EU taxonomy. But I think it's not just the EU taxonomy. What I, as you mentioned and highlighted, as an optimist, which I also kind of observe, is that a lot of issuers also tend to apply to, for example, science-based targets initiative, which I think is a great measure, especially for the hard-to-abate sector. And every year we see a few hundred companies in Asia kind of trying to adopt to it, working with SBTi over a period of 1 or 2 years, really going through that rigor to understand how they can adopt the decarbonization strategy. And I think that is a very encouraging sign, because ultimately it ties down to the piece on transition. Because for credibility of transition, it's important that as far as possible, our issuers are able to align to science-based pathways. And I think that, in my perspective, is a very positive development that we observe every year.
That's a great point, and that echoes what Isabelle Laurent from the Green Bond, from the Principals Executive Committee, and my colleagues Nicholas and his team have been doing, which is not necessarily mandating, this is the transition pathway you have to follow, but there's wonderful work out there in the market, and from the NGO sector and from the technical sector on tools that are all credible, that are all science-based in which to do this. So it's not that one is best, but many of them are very good, and they can be adapted in different ways. Terry, do you want to comment? Oh, that's good.
Yeah, I think I agree with what you've mentioned. I think in terms of practicality, I would say that I think issuers or potential issuers can aim as high as they can practically achieve. I think that would maybe be something that could be useful for them. And also, I think, the level of ambition compared to, where they came from, I think that would be very, very helpful for the market.
Okay, great. We have a technical question for the ESG analyst here. Sorry, did I miss this? Oh, yes. Is there a yield difference between bonds for brown transitioning to green projects and dark green projects? For example, registration projects that enhance carbon capture, improve diversity, ecosystem services, et cetera. So basically, I think the question is there a measurable yield difference between sort of dark green and not so green?
Rahul, Puja.
Anyone in the audience would like to answer that?
Yeah.
I would love to hear your perspective on it. I think every issuer wants to know it. So.
Yeah. Based on our observations, and actually, our observations are rather limited to hard currency, the G3 Asia bonds. So local currencies, we might not have enough insight into pricing, but at least in the G3 markets, is there premium, or so-called premium for some green bonds? Yes, there are. Is there premium for all green bonds? No. So what we see is that for some, yes, we see. For others, no. For another part, they are maybe even a little bit cheaper on the secondary market, right? On the secondary market. Now, in the primary market, I think most green bonds do price in line, or they price at most 5 basis points tighter than the conventionals. Now, 5 basis points in the context of what happened in 2022 and what has happened in 2023 so far is not so significant, not so material. I think, and at the end of the day, investors are still smart but lazy for most of us. But if the issuer and the bankers do advise that primary pricing is tighter by 15 points, I think most investors would not accept that deal. For 3 basis points, it's something that we might consider and accept. But anything beyond 5 it's something not acceptable, at least in the primary market. In the secondary market, of course, there are larger moves, but secondary market pricing is dynamic. It can change from being richer today to becoming cheaper tomorrow. So it's hard to have a definitive conclusion on that question. And
take it from the experts. Okay, Puja.
No, I think I wanted to add a bit more color from sort of an intermediary perspective, and I think where we see sort of greedium or some pricing benefit, is in more stable markets. I think ultimately the reality is that when markets are more volatile, most of the investors who are running funds, even if they are green funds, they all have return mandates. So if it's a volatile market, it's hard to accept sort of a lower pricing yield and whatnot. So that's number one. Number two, I think where we see some pricing benefit is the kind of diversification piece. So if you see a green bond, which the market appreciates, then we see more sort of green funds coming in, investors coming in, and that's where investors tend to kind of get some benefit, right? At the point of when we start book building, it's not so obvious. It's more, I would say, a result of going through that process with investors. But I think more importantly, and that sort of goes to when we started the panel, is that when the Asia bond market kind of was in a more nascent stage and we spoke to issuers, and I think Mushtaq, you mentioned this, the primary question was always greenium. Is there a pricing benefit? But I don't think that's the overriding point of decision making today. Yeah. I think it's a lot broader. It's a lot more strategic. So while people may ask that question, I don't think issuers are thinking in the same vein. And I think it's almost, if I may say, it's a cost. If you don't focus on ESG and you don't focus on decarbonization, as I mentioned, whether you do a ESG label instrument or not, there is a focus on it from the market perspective.
Okay, great. We're almost out of time, but I think we have time for 2 questions and quick answers. I'm going to get to the audience, but there's just one really great question from the app, so please excuse me. What are some ways that we can keep issuers accountable to their transition targets and their strategies at the company level? So that is a real issue.
So I think the one thing is that once you issue in this format, it builds in a self-discipline of reporting. And that reporting is the best way to sort of be putting yourself out there and letting investors and the community judge, where you've, how you've progressed. So I think there's mandatory reporting requirements and the quality of reporting, which I think is only improving. And I'm sure we're going to have future panels talk about the standards that were released earlier this week. I think that's a self sort of a discipliner internally, especially if a lot of this goes to the regulator. That in itself makes you go out of your sort of natural comfort zone and execute. So I think that reporting is a good check.
Absolutely. Same for us. For every green bond or social bond or sustainability bond that we do invest in our dedicated strategies, we always follow up with the bond. After a year, 12, 18 months, that's typically the window when the bond is issued, or rather the impact report is issued. So if we see that, hey, there is an absence of that report, we go back to the banker, we go back to the issuer and ask, hey, where's the report that you promised? It's not there. Most of the time it's because there are delays, which are understandable, but in our process, we will not hesitate to exit that position if there is an absence of a report.
All right, so the investors are on the ball. Okay, one last question from the audience, if anyone has any questions. Looking for any hands? No worries. Okay, then my final question for the panel, and any of you can jump in. Fortunately, this is our global conference for the principals. We're delighted to have it here in Singapore. We do have many people from around the world here, practitioners, bankers, investors. From your perspective, sitting in Singapore with your experience, what is the one key message that you would relay to visitors from around the world who are leaders and practitioners in sustainable finance?
Sure. I think one of the key messages, as a lot of practitioners who came in over the weekend and the sessions that we had over the last day or so would have seen, is that the work on transition in this part of the world has actually accelerated. The level of technical expertise in this region has significantly and exponentially increased. So I think many people, when they go back home, they will be looking into what we can imbibe, what can emerging markets, what can Asia give to the overall taxonomies, what changes are we going to get in the international taxonomies with, or can we take a cue out of the MAS taxonomy, which has, and also the ASEAN taxonomy, which have talked about coal as a feature, which I think will be hotly debated and discussed, something similar to what nuclear was a year back. So I think this is one of the key takeaways for folks who've come to Singapore.
All right, well, thank you very much, Rahul. Thank you so much to the panelists. I really enjoyed the discussion. I learned a lot, actually. And look forward to learning more in the future panels later this afternoon. We hope you will all stick around for the lunch. Feel free to ask me any questions you didn't get to ask earlier, as well as the panelists. And we hope you'll stay for the whole day, including the networking dinner. So thank you all so much. Really appreciate your time and expertise. Take care.